All right, welcome back to another episode of the Black Bullion Show. Gold prices will drop by $150 to roughly $1,600 by the end of the year. This is at least according to James O'Rourke, commodities economist at Capital Markets. But before I get into his analysis, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism out there to the masses. Let's get into it. Okay, so if you are watching this, it is Sunday. I've recorded this on Thursday, and this is important because of data that I will show you later on in the video. But first, let's address O'Rourke's concern. So let's see what he says here. Gold prices are likely to end the year at $1,600 an ounce, which is $150 below the current level of $1,750 an ounce, according to Capital Economics. The main reason for such a bearish outlook is the argument that fears of runaway inflation are premature in the short term, or in the short and medium term, said Capital Economics commodities economist James O'Rourke. What this means for gold is weaker safe haven demand and lower prices by year end, O'Rourke wrote on Wednesday. Despite fears of runaway prices, we think that stimulus-fueled inflation is unlikely in the short or medium term. With interest rates set to remain historically low, we expect the gold price will come under pressure from fading safe haven demand, falling to $1,600 per ounce by the end of the year. Now, I don't know about it hitting this low of $1,600 an ounce, and I'm not sure if this sentiment will continue. But as far as looking at my, quote unquote crystal ball that we'll be looking at later on, which is bond yields, I do understand O'Rourke's sentiment here. Now, again, I'm recording this on Thursday, and we are starting to see some less than positive outlook on the future of the economy. And, obviously we just had the FOMC meeting. The latest unemployment claims numbers aren't good. And one of my, again, favorite leading indicators, the bond yields, are confirming somewhat premature, though, a bearish outlook on the economy, which differs than what I shared in my previous video about bond yields showing a steepening. Now, the steepening is actually starting to reverse. And again, who knows if this will be short-lived? Yes, I understand where James O'Rourke is coming from, but I'm not 100%. I don't want to say that it will drop by year end $1,600 an ounce. I'm not that sure yet. But let's take a look at what I'm talking about when it comes to the 10-year and 2-year. So if you take a look here, last Friday, we had the exuberance and the euphoria in the market, and you start to see some steepening happening here with the yield curve. And usually when you see that happening, it's an indicator that could tell you a few things. But around that time, some analysts were positing that was happening because there's expectation of production, and it was anticipation of increased production and increased inflation. Matching Rourke's sentiment, bond yields are showing the opposite currently, because as you can see, it's starting to now reverse. And I'll continue to monitor this as time progresses. But, I think it is a little bit too short-lived to say that we are for sure going to have, such a drastic drop in the gold price by the end of the year. But I don't know. Maybe you guys are seeing some data that I'm not seeing, if you guys agree with O'Rourke. If you guys agree, let me know why in the comment section below. We can try to hash this out and try to figure this out. But thanks again for watching. Please give the video a like. Please subscribe if you're new. It's Black Bullion.